Hello, learners. I hope that you are fine and you have very well understood the theory of expenditure method, which I had uploaded video at 3 p.m. And now we'll be doing the numerical related to it. Please see very carefully, and I'll be sharing all the numericals on the description section also, so that you can go through it. Okay. So I'm just sharing the screen so that you'll be able to understand it. And first we'll recapitulate the theory for your revision purpose, so that you can see it very well. Okay, so yes, first we will just do it very fast because we have less time. Step 1, take final expenditures by all the three sectors. Like, we have to take investment also, and we have to take export also. So we'll add 5 things: private final consumption expenditure, which is expenditure of production sector; household final consumption expenditure, expenditure of consumers; government final consumption expenditure, expenditure of government for people; gross domestic capital formation, it is an investment for the whole year done within the domestic territory; and net export, export minus import. So this will be first step. Second step will be, we have to deduct 2 things: depreciation, net indirect taxes. Okay, we'll get NDPFC, and when we'll get NDPFC, we'll add NNPFC, and we'll add NFIA, net factor income from abroad, to make it NNPFC, national income. Okay. And precautions also, I had told you that net domestic capital formation is given, then don't take depreciation. If you are given fixed in gross domestic fixed capital formation, then take change in stock also. Otherwise, you will not take change in stock. Okay. Now see the numerical. See, this is the numerical. First see. Don't see the calculation part. Just see the above part. It is written: find national NNPFC, net national product at factor cost. Private final consumption expenditure is given 2,350. Government final consumption expenditure is given 800. Gross domestic capital formation is given 1,400. Export is given 850. Depreciation is given 700. Indirect taxes 250. Net factor income from abroad 3,000. Import 600, and subsidy 150. Now there are 2 things, 2 complication over here. First complication is that you are not given net export. You have to calculate net export, because you are given export as well as import. You have been given import and export. Like, export is 850, you can see it here, and then you can see import also, it is 600. So 850 minus 600, your net export will be there. Here I have done this. And second complication is that you are not given net indirect taxes. So when net indirect taxes is not given, you will deduct subsidy from indirect tax. 250 minus 150. See, indirect tax is 250 and subsidy is 150. So you will deduct subsidy from indirect taxes. So 250 minus 150, you will get net indirect tax. Now see, you can write the formula in the board exam in this manner also, in abbreviation also. You don't need to write full term. So you can write in very short, like private final consumption expenditure, you can write as PFCE. Government final consumption expenditure, GFCE. And gross domestic capital formation, GDCF. Net export, this also you can write in short form also. Minus depreciation, DEP, and net indirect tax. Now we have taken simultaneously, like private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and because net export was not given, so I have taken this in bracket so that the examiner gets an idea that you have calculated net export. So you have to show each and every calculation. Don't miss any calculation. So examiner can see that I have taken export and I have taken import and I have deducted it. Okay. So I have found net export. Then depreciation is there, 700, and then net indirect tax. In the same manner, I have created a bracket, and then I have deducted subsidy from indirect taxes, and I have calculated net indirect tax. This bracket will help examiner to know that you have calculated in this manner, you have calculated in this manner. After calculating it, you have to just add or subtract whatever signs are given according to them, and then your answer is 4,000. So I don't think that I have to explain calculation this part. Only I want to calculate the process. Now you have got 4,000 as NDPFC. So what will you do? You will add net factor income from abroad to NNPFC, NDPFC, and you will find NNPFC. So NDPFC plus NFIA is NNPFC. Now again, I will give you one more precaution to be followed. Like if it is written net factor income to abroad instead of from, it is written to, then you will make it negative. Okay, you will take it as negative because they have given net factor income to abroad. More we have given to abroad than we have got. Receipts are less and payments are more. Due to this, what has happened that our net factor income from abroad has gone negative. Either they will write in negative or they will write net factor income to abroad. Okay, so you will calculate like this and you can find it out. We'll do one more numerical. We'll see one more numerical. See, this is one more numerical. Here it is given private final consumption expenditure 6,520, government final consumption expenditure 1,900, net domestic fixed capital formation. See, now the precautions section, you can refer to it. Net is given in place of gross. It is not written gross, it is written net. And here fixed is also there. So both precautions you have to follow. When net is given, we don't have to deduct depreciation. We have to ignore depreciation. And when fixed is given, we have to add change in stock. So two things you have to remember. Then net export is given, depreciation is given, but we do not require depreciation. Net indirect taxes is given, net factor income from abroad is given, okay, and import is given. See, net export is also given and import is also given. This can be done to confuse you, but if net export is there, then you don't require import. Okay, you require import only if export is given and net export is not given. So net value is not given, then you require to deduct import from export. But if net export is already given, then you don't require. And then you can see change in stock is also given because it is required. It is written fixed, so you require to add change in stock. Now what we have done, PFC, private final consumption expenditure, GFC, government final consumption expenditure, and we have made the abbreviation like this, net domestic fixed capital formation. You can make abbreviation like this because the examiner can very well relate to it. Net domestic fixed capital formation. It is 1320. Then there is change in stock. Okay, change in stock is given 450. You have to add change in stock. And then net export is given 650. And then net indirect tax is given. Only we have not deducted depreciation because the net value was given. So this is our answer. And this is the value of NDPFC, net domestic product at factor cost. And what we have to do, the full and final numerical step is, last step is that we have to add NFIA, net factor income from abroad, to NDPFC, and we'll get NNPFC, that is national income. So students, I hope that you have understood this. You can see these numericals in the description section. I'll be sharing these in description section. Second thing is that if you find any numerical or any question which you are unable to understand, you can share that question to my email ID, or if you have my WhatsApp number, then you can share there also, or you can share in the comment section of any of the videos, then I'll be explaining it again. So feel free to ask your doubt. And if you have any language problem also, that also you can discuss in the comment section so that I can explain in Hindi also. For that, I will make separate video to explain to you the concepts in Hindi, because I can very well teach in Hindi also. So that will not be a problem, but take maximum benefit of these videos and subscribe this channel to get maximum concept, because till 28th of May, because on 28th of May you have board exam, second term exam of CBSE in economics. I'll be putting all according to the 12th class syllabus only. I'll be putting all the videos according to the 12th class syllabus, so you can take maximum benefit of it. So keep learning economics and keep enjoying economics. Thanks a lot.